to welcome everybody to our webinar on the rising cost of homeowners and property insurance in Louisiana. I don't think this is a surprise to anybody with your homeowners renewals, if you own a business, your commercial property renewals, etc. And it's become such an issue in the state of Louisiana and many other states across the country that the Government Affairs Committee recently had a presentation, much like you're going to see today, and it's affected our business community so much, the community. So what we want to do was do a webinar for our membership as well as the community and membership of some of our partners. So that way we could pass that same information on to you. So one thing I want to also mention is this is something that the Chamber tries to do, is provide value to the business community, to make the business community a better place to operate, as well as having just a better community for our citizens to live. So anybody who's on this webinar, we thank you for being here. If you have a local business, we would certainly ask you to consider Chamber membership. This is, one of the benefits that we try to provide our members, as well as many of the other benefits, networking and business related. So real quick, my name is Kyle Bierbaum. I am the chairman of the Advocacy and Public Policy Committee for the Chamber, maybe better known as Government Affairs Committee. But I'm also, my day job is I'm an insurance agent at Aubert Insurance. And so today what I've done is we've got somebody from our state association, Ben Albright, who is going to kind of take us through what our Government Affairs Committee has already learned, what us in the industry have already learned. And so that way we can provide that information to you, more importantly, so you know what can be done moving forward to try and fix this crisis. So a few quick things. This webinar is being recorded, and it will be emailed to everyone that's registered, and then it will also be posted on the Chamber's YouTube channel in the next couple of days. There will be a Q&A at the end of this presentation, so we will have we have allotted quite a bit of time to do Q&A. There is a Q&A box, so if you have a question that you want to ask during the presentation, we ask you to put that into the Q&A box. And then we can answer those either in the box back to you, or we can answer that live at the conclusion of Ben's presentation. So without further ado, I would like to introduce our speaker. Ben Albright is the Vice President of the Independent Insurance Agents and Brokers of Louisiana. He will be taking over as CEO in January 2024. The mission of IIABL, or as you may hear me refer to as the Big I, is working in the public interest to be the unrelenting advocate for the success of member agencies by meeting their educational, political, and business needs. So without further ado, I'm going to turn it over to our guest speaker, Ben Albright.
Thank you, Kyle, and thank you to the committee for having us before, to you guys for having us for the bigger meeting here. As Kyle mentioned, I represent the Independent Insurance Agents of Louisiana. So our members are small businesses like Kyle works at, where they represent policyholders, both personal and commercial, to try to find the best insurance coverage for them. So they don't work for one specific insurance company. They have contracts with a bunch of them so that they can shop around and find the best insurance for you. The problem is that right now there's not that much shopping around to be done because there aren't very many companies that want to write business in the state. And so that's a little bit about what I'm here to talk to you about. I'll go ahead and share my screen. I've got a little presentation we've been doing across the state to legislative leadership and some others. Government affairs is a big part of what we do at our association, trying to make the insurance market such that we can find markets for our policyholders that are affordable and have sufficient coverage to really protect your assets. So I'll go through a little bit about what the market crisis is that we're in currently and how we've gotten here. Then I'll talk a little bit about the inherent problems in Louisiana. There are just some things that there's nothing we can do about, but that do cause it to be more difficult to write property insurance here than in other places in the country. And then we'll go into some of the things that we can control. The Louisiana legislature and regulatory environment and tort system is a big part of why companies do not want to do business here. And then finally, I'll talk about some solutions that we think we could propose in the legislative session, some of which we plan to bring, some of which insurance companies have talked about bringing, that could really move the needle and hopefully bring some competition into the state to drive down prices in the long run. So the insurance crisis that we're in right now is the worst crisis that anybody in living memory has ever seen. My dad's been in the business 43 years. He's getting close to retirement age, and he has never seen a market like this. It's worse than it was after Hurricane Katrina and Rita. Kyle can talk to you about just how bad it is, but we do not have markets writing business in the state nearly enough. And there's a couple reasons for that, but the primary one is this. Insurance companies just are not making money in the state. This is the homeowners insurance profit and loss. That's underwriting profit and loss. So all the money that they take in minus all the money that they pay out in the form of expenses like salaries and those things, plus their claims. You can see I have this graph starting in Hurricane Katrina and Rita in 2005. They lost about $9 billion in the state from those hurricanes. And you can see over time here, they gradually start to make that up. And in the years when there weren't hurricanes, they are profitable and they almost get back to break even. And that's when 2020 hits and we have hurricanes Laura, Delta, Zeta, and then in 21, Ida. And all of a sudden they're way back into the red. And so that's the fundamental problem, is that they're not making enough money in the good years to then fund for the bad years. And that's why insurance companies do not want to do business in the state. So there's a few reasons for that. One of which is just that the state is a tough place to do business because of the storms, but there are some other factors and we'll go into that. But you guys well know that there's a huge negative impact on citizens and businesses because of this crisis. We were talking, even just Kyle and Jessica and I were talking before this about some people that we know that may have to turn in the keys to their house because they're not going to be able to afford the increase on property insurance. Well, that's a huge problem. We also have a bunch of commercial agents that are telling us that some businesses who may not have a mortgage and so can make this decision have just decided not to buy property insurance this year. Well, that's a disaster waiting to happen because they're betting that the wind isn't going to blow. And if it does, that's going to be a significant negative impact on our economy for a long, long time. And so this is a huge, huge problem and at a scale that we've never seen before. We've been working with the Bankers Association, the Realtors Association, the Home Builders, Louisiana Association of Business and Industry, and others to try to come up with some solutions to this, because obviously many of you will know, being in those businesses, that they are having significant effects. If we can't find affordable insurance for you, then the banker can't make a loan, the realtor can't sell the house, and the home builder doesn't want to build a house since nobody's going to buy it. So this is spreading across the economy very, very widely, and so we need to find a solution. One solution that people propose is Louisiana Citizens. It's our market of last resort, but I'm here to tell you that they cannot afford to insure everything for a variety of reasons. One is concentration of risk. Insurance 101 is that you want to spread the risk. That's why you buy insurance, is because you don't want to take on the whole risk of a hurricane coming and knocking down your house. So you spread that to the insurance company. But the insurance company also doesn't want all of the risk, so they spread that to the reinsurance companies. And reinsurance, which is essentially insurance for insurance companies, is a much smaller market this year than it has been in past years for a few reasons. One being that the loss experience has been really bad, and the other being that the interest rates have started ticking up. So there are other places for private capital to make their money rather than investing in reinsurance. So Insurance 101 says you don't want every house on the street. You want a few houses here and a few houses in North Louisiana and a few houses in Texas. And you want to spread your risk so that one storm can't hit everyone and have a significant effect on your budget. So we can't afford to put everything with Citizens. The other thing is that they can't buy enough reinsurance. As I said, there's less reinsurance available this year, about 11% less globally than there was last year. And that makes it to where they literally cannot buy enough insurance. Louisiana Citizens bought over 3 times as much reinsurance as they did the year before because of how much they've grown this year. but they could not buy anymore. It was costing them 85 cents on the dollar to buy anymore, and they didn't have any more available to them after the top of the tower that they bought. So they cannot spread the risk anymore. And then finally, you guys may be aware, after Hurricane Katrina, the losses in Louisiana citizens were so bad that they had to write a bond that we, as policyholders of any private admitted policyholder in the state, any admitted company in the state's policies, are still paying off the dividend from Hurricane Katrina in 2005. It's set to expire in 2026, I believe. But if Louisiana citizens were to absorb a huge loss, there is a risk of assessments, which then gets passed on to every policyholder in the state. So the only way to improve the market long-term is to create competition. This is, the basics of capitalism. Let the free market do what it's supposed to do. And unfortunately, we have not been doing that in this state. And so that's what we need to get to. And I'll walk you through how we can do that. But first, a few of the inherent challenges in Louisiana, and the big one, obviously, is hurricane risk. This isn't going to be a surprise to anyone. When a hurricane comes through, we all know the size and scale of it. It is going to damage a huge percentage of our state's property, and that is difficult to insure because, again, you want to spread the risk. And when a hurricane is the size of the ones that have been hitting, it's difficult to spread the risk more broadly. The second is that we're a small insurance market. The Louisiana homeowners insurance market is about $2 billion in gross written premium, which means that on that graph, it's hard for them to make back up the losses in the years between storms. And that's important because other states like Florida and Texas that have similar hurricane exposure to us are also much larger markets. There's more people there to buy insurance, and there's richer people there in a lot of cases to buy insurance. So it's more attractive to the companies. And then similarly, we've got a little bit of a weak economy. It makes recovery from storms difficult, and it makes it a less inviting place to come and do business. And then finally, we've got high risk industries. They don't just want to write your homeowners, they want to write all of the businesses around. And when a lot of the businesses around are petrochemical and some of the things that we do here in the state, lumber and agriculture, that's not as attractive as somewhere that has a lot of tourism and those kinds of things. That is just an easier risk for an insurance company to write. So those are some inherent challenges that we can't necessarily do anything about. And this graph kind of sums it up. You can see these are the severity of storms that have hit recently and this is from the national NOAA, the National Oceanic and Atmospheric Administration. You can see that Texas, Florida, and Louisiana are the most impacted. But I do want to draw your attention to this footnote here. The relative costs are more acute in Louisiana because of its small population and economic size. And that's fundamentally the problem, is that right now we're competing to get capital deployed in our state against all of these other states because the reinsurance, there's less reinsurance available. And so we need the insurance companies to choose to do business in our state when they might otherwise choose to go somewhere else. And that's difficult because of some of our issues. So what can we do about that? The main thing is we need to reform these three areas: the regulation, legislation, and judicial branch, the tort environment for insurance companies, because that is compounding our problems. And if you don't believe me, this is an industry report from APCIA, RAA, and the Bermuda Reinsurance. APCIA is essentially the primary insurers, the guys that we buy our insurance from. You see their names all over the place: State Farm, Liberty Mutual, Progressive, those guys. They're all members of a trade group called APCIA, the American Property Casualty Insurers Association. And then RAA and the Bermuda Reinsurers generally are the people that sell the reinsurance to those companies. So this is as close as we can get to a united voice for the industry as to what they think about our state. And this report says essentially that natural catastrophes are getting worse. We're getting bigger storms, we're getting more frequent storms, but that's fine. Insurance can manage that. We've got catastrophe models that we can build, and it's not a problem. The problem is what they call man-made catastrophe that is being put on top of that. Social inflation caused by legislative, regulatory, and judicial verdicts that are causing these huge spikes in claims costs that they can't account for in their models because it's 100% human error. And this report identifies 3 states that are the biggest offenders in that: Florida, California, and Louisiana. You guys may have heard that Florida recently in January had a special session on insurance where they did massive tort reform and changed the biggest problems in Florida. And the industry since that time has started to talk differently about Florida, about how well they're doing and trying to move the needle on insurance. And that's essentially what we need to do in Louisiana as well. And I'll go through some specific proposals for what we can do to make those changes. But historically, insurance companies have said the regulation, the legislation has been bad, and they don't always get believed because they're described as Chicken Little. They're always saying the sky is falling. But what I'm here to tell you is that when they stop taking your money, there's real problems. And that's what's happening right now. We do not have insurance companies in this state that want to write business. And that's why the price has gone so through the roof, because there is no availability of insurance, and that affects affordability as well. So the hostile tort environment, the negative legislation, and the difficult regulatory scheme at the Department of Insurance are a huge part of the problem. So what can we do to fix that? I'll give you a few ideas that we plan to advance or some of the insurance companies plan to advance in this session. The first, you guys probably heard during the special session, was the Insure Louisiana Incentive Plan. And I will be the first to tell you this is not a long-term solution. This is a shot in the arm, like a stimulus to insurance companies to say, hey, right now we have a crisis and we need you to come write business right now, even though you may not think it's profitable. The government is going to give you a grant to give you capital infusion so that you can come write some business. And the open enrollment period for that ends on Friday. So hopefully beginning of next week, we should see a list of what companies are interested in that. And hopefully that will be good news of new capacity coming to the state, which hopefully will drive down prices. The next thing is the Fortified Homes program, and it goes really beyond this one grant program. The single thing that we can do to improve the environment in the state the most is building better homes, specifically keeping the roof on homes. If the roof stays on during the storm, it reduces the cost of losses by over 70%. Well, that changes the game. If you can build a better roof and keep it on the house during the storm, that makes Louisiana suddenly much, much more insurable, barely different than other states that do not have our coastal exposure. So anything we can do to build better homes, whether that's this grant program, which helps people afford to retrofit their homes, or whether that's improving the building code to build better homes and specifically better roofs, anything we can do in the long run is the single most important thing to improve the environment for insurance in the state. The other thing we can do is tackle the social inflation costs that I mentioned in that report earlier. And the first thing we can do is the bad faith penalty statutes. Many of you know that after the storms, insurance companies were not good about paying their claims. And we will be the first to tell you that. Agents hate it when insurance companies don't pay claims because we sell a promise that, hey, when the claim comes, we're going to pay for it, and here's why. And then if the companies don't deliver on that, that leaves us out in the lurch every bit as much as it does the policyholder. And so we don't think that you need to get rid of the bad faith penalties. We would never support that, because if a company is really a bad actor and is intentionally not paying claims, they ought to get hit with every penalty that the law can throw at them. What we're looking at is refining the trigger for the bad faith penalty. What the bad faith penalty says currently is that the insurance company must pay within 30 days of satisfactory proof of loss. But satisfactory proof of loss is not defined anywhere in the statute. And so we need to refine that because it will be helpful for policyholders and for insurance companies. The policyholder wants it to be defined because then they know this is what I need to do under the law in order to fulfill my obligation and get the company to pay. And then the company wants to do it because right now that's being interpreted by judges and juries. And so they're saying retroactively, at this point in your claim, you should have known. And so anything that you paid after that time, you're paying bad faith penalties on. So what we need is a bright line in the sand so that everybody knows at this point, the company has 30 days and they're on the clock starting right now. And that'll be better for everyone because it doesn't end up in litigation that gets drawn out and increases the cost for everyone. It gives the policyholder the ability to put the insurer on the clock, and it gives the insurer clarity about when the clock starts so that they can do the right thing and pay in the right time, or else know that they're going to get hit with this penalty. So then another part of that is the signs proof of loss. In pretty much every state except for Louisiana, the way that they know, the bright line in the sand that I was talking about for the bad faith penalty, is a form that you sign as the policyholder that says, this is what I believe my loss is. And so here it is. And you either tell me I'm going to pay that within 30 days, or I'm not going to pay that, and here's why, so that everybody's on the same page. Louisiana, for a lot of obscure reasons that I don't need to get into, has said through court cases that the insurer is not allowed to require that. Well, what we'd like to do is put into statute that they can require that, so that there is a clear line in the sand for both the policyholder and the insurer to know when they have fulfilled their obligations and the bad faith penalty starts, so that everybody can be responsible to everybody. And then the other piece is reforming the department. The Department of Insurance is really difficult to work with for insurance companies. It takes a long, long time. Kyle can tell you right now there is a filing in the department that has been there since August of last year to bring new capacity into the state from a AM Best A-rated, one of a top national carrier that all of you have heard of. And the reason that they have not deployed that capital is because the filing is tied up in the department. It's been there since August. They wanted to start writing January 1st, and they still have not, because the commissioner has not approved that filing, because it takes a long time and because he is trying to protect the policyholder by not approving rates that are excessive and all of that. Well, what we would say is let the free market handle that. Just like every other business out there, if insurance prices themselves too high, a competitor is going to come in and price it a little bit lower until you drive it down to a market level. Well, we've never done that in the state of Louisiana. Property insurance, property and casualty insurance, is one of two things in the state of Louisiana that the government tells them what price you can set. One is the monopolistic utilities, and then the other is property and casualty insurance. So government monopoly, or a government allowed monopoly, and then property and casualty insurance. Even health insurance, which is the most expensive insurance that most of you will ever pay for, is not regulated by the Department of Insurance. But for some reason, property and casualty insurance is, and clearly what we've been doing right now has not been working to keep prices down. So we think it's time to open it up, let companies do what they need to do, and let the market sort out the prices, because what we've been doing hasn't been working. And so we need to give the free market a try. If we have competition in the state, that is the single thing that we can do to drive down prices and keep stability for insureds after a storm. We just need there to be enough insurance companies here to share the risk. And that is not happening right now, because essentially the department is keeping people out by making it too difficult to get rate filings approved. So just a few more things. There's a 3-year rule that protects policyholders if they've been on a risk for more than 3 years. We like this law because it prevents companies from canceling a bunch of business right after the storm. But we do think that there probably needs to be a little bit of a modification to it. Right now, it says that they can't even change the deductible on those policies. So you've got some policies that have been enforced for 25 years in the New Orleans and Houma Thibodeau area, and some of those areas that have a flat $250 deductible on it. Well, you guys know, even in St. Tammany, nobody has written a flat deductible in probably 15 years, since Katrina, at least. I would think everybody's got a percentage hurricane deductible, but they're not allowed to change that on those policies because of this 3-year rule. So we'd like to give them a little bit more flexibility on that, while keeping the spirit of the law intact to prevent policyholders from being canceled after a storm. So we're looking at a way to modify that. Companies absolutely hate this law. We are the only state in the country that has a law like this, and it is number 1 or number 2 on pretty much every company's list of why they don't want to do business in the state of Louisiana. Next thing is a statutory prohibition on the assignment of benefits. This is one of the things that Florida did in their special session that has really caught the attention of insurance companies. There is a practice called assignment of benefits, which says basically a roofer or an attorney or a public adjuster or somebody comes to you and says, look, I'll work for you for free. I'll fix your house for free. All you have to do is sign over the benefit of your insurance policy to me, so I'll collect on it instead of you. And so then the insurance company is negotiating with the roofer on how much the roof costs. And that gives obviously the roofer an incentive to inflate the cost of the claim because it doesn't damage the policyholder, it only damages the insurance company. And so that has caused huge problems, especially in Florida. Some of you have probably seen the recent news stories about Apex Roofing and a law firm called MMA that are getting into a lot of trouble for some shady business practices. This is at the center of that. Assignment of benefits is the big problem that is allowing them to do some of these things. And we need to put a prohibition on it. I think that the policyholder should get everything that they're owed, but the company should pay it to the policyholder, not to someone else. And the negotiation should be done with the policyholder because that's who's party to the contract. It's a policyholder signing a contract with the company. And so that's where the relationship needs to stay. And so we'll have a bill to try to clarify that and prohibit the practice of assignment of benefits. This is a complicated one. To be honest, I'm not sure there's going to be legislation on it. There needs to be some level of oversight over the people that come in and do work after a storm. The last thing that we want as agents is to prevent people from coming in from out of state after a storm, because we just don't have enough capacity. After a storm and every third roof in your neighborhood needs to be replaced, the local roofing companies don't have the capacity to do that. So we're always going to need more people to come in. The problem is that we have seen some abuses where a roofer comes in and gets the policyholder to sign something and they do a pretty poor job of putting a new roof on, and then they charge the insurance company a bunch of money and leave town. They go back to Minnesota or wherever they're from. And then they're not filed with the contractors board or any of that stuff. So it's very difficult for the policyholder or the insurance company to then come back after this group to try to rectify the problem because they've left the state, they're gone, baby, gone. And so we need to find some solution for that. But to be honest, we haven't found the right language yet. We're still working with the Home Builders Association and some other people. We don't want to make the restrictions too onerous on the people that are here and doing a good job and doing the right thing, or people that are coming in and doing a good job and doing the right thing. But we need to kind of rein in some of the bad actors. And so we're trying to find a way to do that effectively without causing problems for the regular building industry. My expectation is we're not going to end up seeing any legislation on this piece this year because we haven't found the right solution yet, but we are going to continue to work with the home builder industry and contracting industries to try to find out what the right solution is that we can reasonably implement given the resources that we've got. And then the last thing is just tort reform. You guys have probably heard us, amongst others, talk about the need for tort reform, especially in commercial auto. It's a huge problem. We have the highest rates, if not the highest, then very, very close to the highest rates in pretty much every line of business in insurance other than workers' comp in the country. And tort reform is the one thing that we can really do to move the needle on that. And it will have a bleed over effect into property as well, because an insurance company doesn't want to come here just to write your property insurance. They want to write every line of business. And they've made the decision right now that they don't want general liability and commercial auto and all of those things in our state because it's not affordable. And so they don't do any business in our state. And so we need to fix that, but we don't believe that it's politically feasible until 2024 because the governor that we've got is not going to sign any more than what he signed in 2019, which was not nearly enough. So we expect that after the governor's race, assuming that we get a governor that is more amenable to that than Governor Edwards has been, we do expect to bring another tort reform package and hopefully fix a lot of those issues. So that's all I've got. I'm Benjamin Albright with the Independent Insurance Agents, as I mentioned, and I'm happy to answer any questions. We've been going all over the state talking to legislators about this, and we have some pretty specific proposals built out that we've worked on in conjunction with some insurance companies that we're trying to get to deploy some more capacity. So I'm happy to answer questions on any of that.
And just as a reminder, if you have any questions, please put them into the Q&A box, and so that way we can see them and get those answered for you. Ben, you must have done such a good job. I am not seeing any questions in the Q&A box. So is there any questions anybody has? Because we can't see you, so if you try and raise your hand or do anything like that, like a normal Zoom, that will not work. You will have to put it in the Q&A for us to see it.
Well, Kyle, I can't put a question in the Q&A box since I'm the host, but I do have a question about, you were talking about the fortified roofing. Is that something that the state is considering grants for, especially for existing housing? And can you talk a little bit about that?
There's a few pieces to it. One is fortified is a kind of a gold standard out there for what a building can be built to, and especially what the roof can be built to. So it is above and beyond the normal building code. And then to get a fortified certificate, you have to get an inspector to come out and look at it and make sure that you're doing everything exactly the right way. It involves a lot of things like taping the seams in the plywood on the roof deck to make sure that even if shingles blow off, water can't intrude into the house. They use ring shank nails instead of regular nails. I'm not an expert in the subject, but there's a number of things that you have to do to get qualified for that. The Fortified Homes program is a program that was actually passed through the legislature last year, but they didn't fund it, which would allow the Department of Insurance to give out grants to homeowners that want to retrofit their house to a fortified roof. Again, I'm not an expert, but my understanding is that if you're building a new home, the cost to go from what our current building code is up to fortified is fairly minimal. It's a few $1,000s at the very most. The problem comes when you're trying to retrofit an existing home, because you have to not only take off the shingles, but the whole roof deck and change how how the roof is strapped onto the house and a number of those things. So it can get fairly expensive. And so this would be a grant program to encourage policyholders and homeowners to retrofit their house to the higher standard and build better for the long term. Harden our homes is the term that you often hear said about it. And to try to help people finance that with some government monies. But again, we would encourage anything we can do to build better for the long term, whether that's improving the building code or anything else, not just that program.
And to also kind of go a little bit further, because the fortified is going to be certainly a long-term solution. Mobile, that area, Baldwin County, Alabama, had a similar problem, to us, where they couldn't get insurance 10 years ago. So they started using the fortified program. And, today, the fortified homes, in that area are worth more, they sell for more, but their insurance premiums are substantially cheaper than a non-fortified home. So it's made a drastic difference in the insurance market in Alabama. And so that's what we're hoping will take place here. So we do have a couple questions now. So Ben, the first one, is anything being done to improve the process for new insurers to the market? How, if at all, has Mr. Donlin addressed this barrier to entry?
Yeah, so I'm going to try to be diplomatic here a little bit. The commissioner is aware that this is an issue for some companies. And he would tell you that he is doing some things. He's lightened up on a couple of his desk rules, which are not anywhere in statute, but are things that he enforces on companies when they're applying to do business in the state. Functionally, our experience is that it's not working. Everything that we're hearing from companies is that it's still a disaster to come into the market, to bring your product to the market, or to get a rate increase, or whatever it may be. And the reason is that Commissioner Donlin sees his role as kind of a champion of the policyholder, which he is. I mean, that's a big part of what he's supposed to do. He's supposed to make sure that the companies are solvent on all of that. Where we would disagree with him is that, for instance, they look very closely at the maximum potential profit in a filing. They say that if the company says that even if things go exactly perfectly, this is how much we could potentially make. And the commissioner has some guidelines that he will not approve if it's above that. And what we would say is, right now, if with him not approving the ones that are sitting in his office, those people are going to citizens, Louisiana citizens, which is way, way more expensive than what these guys are asking to make, as what they're asking to charge for premium. So he's not really helping policyholders in practice. And so we would encourage him to just approve things if they're not doing anything that's illegal, discriminating against people unfairly and those kinds of things. He ought to approve it and let the free market take care of setting the rate appropriately, because if somebody prices themselves too high, people won't buy it and they're not going to write any business, and that's fine. And they'll have to file for rate decreases if they actually want to write anything. Because the worst thing that we can do is force everybody to go into citizens, because that's going to be astronomically more expensive, in addition to being a risk for the state in the form of assessments.
Excellent. Okay, so next question. What is the likelihood that enough of these proposals will be enacted to move the needle?
So we have been talking to a lot of legislators, and they are receptive to the ideas, at least in theory. You guys know well enough that the rates are going way up. People are talking about turning in the keys to their house to the bank because they're not going to be able to afford the insurance. And we're hearing a lot of horror stories, and the policy makers, the legislators especially, are hearing that too. They hear it from their constituents. We walk into people's office and they already know that insurance is going to be a big issue this year because policyholders are being impacted so heavily. So I think there is real political pressure to get it done. The devil's in the details, obviously. A bill can go so sideways in the legislature so fast that it's startling. It'll make your head spin. So I think that we have a good chance of moving the needle on this. And it's about whether we can get the grassroots support and everything that we need. I would encourage you to write to your legislator and tell them, look, what we got ain't working. We need to get more insurance companies in here because they need to hear it, and they need to hear it throughout the session. But I am optimistic that we can get some real reforms done.
Okay, and I'm gonna try and make sure I try and read this one correctly, just to make sure. So do y'all have any thoughts on the poor quality and incompleteness of the original adjuster's estimate, spawning the ambiguity that the insurance companies feed off of as they delay settlements?
Yeah, so I agree with you that a bad first adjustment is probably the most crucial thing that can go wrong in an insurance claim, because by and large, everything is based off of that first adjustment. They'll sometimes send somebody out and completely restart the process, but that's not a good result for the policyholder either. So getting a good first adjustment is extremely, extremely important. We've had conversations about how do you fix that. We even have been approached by some policyholder rights groups that typically are hard opposed to this idea, that have said, maybe we need to look at lengthening the time that companies have to make first contact with their adjuster so that they focus more on quality than on quantity at the beginning. Because if a policyholder gets to see their adjuster within 30 days, which is what the statute more or less says right now, but then they get a terrible adjustment, that doesn't do anything good for them. So it may be worth looking at lengthening that time and giving companies a little bit longer of a period to get the adjuster out there in the first place, if that can be tied with some kind of guarantee from the company that you get a better adjustment out of it. And that's difficult. I'm not sure which group you're with that you said you've offered remedies. I've seen a number of proposals on it, including some like specific strategies. And I don't know what's going to get done exactly on it. But I do think that you're right that that needs to be addressed both by the companies in their business practices and potentially by the legislature in some way, shape, or form.
And Ben, do you have any idea what the qualification process is for that grant money for the fortified program?
Not 100%. They haven't completely released the regulations. They put out their draft version beginning of February sometime, and they're required to have a public comment period, which I think closes this week. Don't quote me on the date, but they should be putting out their final regulation on it in, I would expect, this month's version of the Register. If not, it'll be the April one, but I think they'll be able to get it done in time for the March one. So I'd expect it to be in the next couple of weeks that we see the final version of their reg describing all of the requirements. By and large, they have to have an existing home that is going to have the roof replaced. You have to completely replace the roof. Obviously, you can't do this with just a patch job or anything like that. And they have to get a fortified inspector to look at it at various stages. I think it's like 3 different stages in the process to make sure that they're really meeting the code standards and all of that. They have to make an application to the department in advance to get approved for the monies. And then the department has some criteria by which they will decide who gets the grants and who doesn't. And it's largely, you know, need based, where people closer to the coast are more likely to get approved than people further from the coast, because the need is greater to have fortified roofs there, obviously. But the full regulations from the department should be coming out here shortly.
So that is all the questions that I see. Doesn't look any more coming in. So first, I want to thank Ben for coming and, you know, presenting to us. But more importantly, the one thing I certainly want to highly recommend to everybody is to stay engaged with this. You know, if you're a member of the chamber, there will be more information coming out as time progresses, as we get more information from not only Ben and the Big I, but other groups or you know, legislators. But this is not going to be an insurance industry fix. This is going to have to be, you know, whatever business you're in, your associations, getting involved in this. You can certainly, you know, reach out to the Big I. You can certainly reach out to, you know, myself or the chamber, and we can, you know, connect you with who you need to connect with, because this is going to be something to where we're all going to have to put some pressure on the legislators to move the needle on some of these things. And if we don't, then we kind of know what the result's going to be. It's going to look a lot like it has last year and this year, and that's not something we want or need. So I just want to certainly encourage everyone to stay engaged and be on the lookout for more information. And Ben, do you have any final thoughts or statements?
No, I agree with everything you just said. We need people to be involved, talking to your governmental officials. If you know anybody in the governor's office, we're going to need some work there as well. But anything we can do to move people in this direction, we need to do it, because it's a desperate problem.
Absolutely. So just a reminder, everyone will be sent a copy of this, and also it will be on the Chamber's YouTube channel. So you will be able to rewatch it later. I'm sure some of this information in the next 30 days will probably change some more as legislation starts to get pushed. But I just want to thank everybody for joining us today. Hope you received a lot of benefit from learning this today from Ben. And I would also just encourage you, if you are not a chamber member, to please consider chamber membership, so you can continue receiving updates and important information going on in our business community and as a citizen of St. Tammany. So again, Ben, thank you very much. And thank you everyone for joining us, and everyone have a great day.